the DXY and why it's so important, why you guys should be implementing this into your confluences when it comes to trading USD pairs and USD pairs that kind of coincide with that. Maybe you're trading GBP USD, or maybe you're trading USD CAD, or maybe you're trading Euro USD, and etc. So if you're trading that, I would definitely say add the DXY with that to give you another form of confluence. And that being said, I'm going to show you how I use the DXY to catch a 1 to 5 risk reward trade. And yes, I caught a 1 to 5 today on GBP USD, and a lot of that had to do with the fact that I understood the higher time frames. I understood where the market was trying to go, but on top of that, I had the DXY as another form of confluence, right? The more confluence you have, the more confidence you're going to have. If you see that all these things are aligning to tell you one thing, then that's giving you more confidence to hold your trades out to no matter what price is doing. Maybe on the 5 minute or 3 minute or 1 minute time frame you see price pushing up or it's kind of slowing down. You're confident because of what the higher time frames is telling you, what all your confluences telling you, what the DXY is telling you, right? If we look at the DXY, the DXY for like the past month has been a complete uptrend. The past 25, 26 days, the market has just been going up, and up. So with that being said, right, and nothing has changed. Nothing has changed when it came to Sunday. I seen all the information. I'm like, all right, cool. So, for the most part, I'm going to be taking buys. I'm going to be taking sells when it comes to DIX, when it comes to GBP because the market has been doing the complete opposite. It's been super weak, right? If the dollar is strong, the pound is going to be weak, and that's exactly what happened. The pound was so exhausted, it was so weak, and it just wanted to continue to be weak. The gravity is pushing the market down. It wanted to drop. You had multiple confluences, you had structure, you had SME rejections, you had the DXY, you had everything telling you to take sells, and that's what you want to be doing. You want to give yourself a higher chance of actually having a trade go in your favor. Break down the trade. If someone asks you why are you taking that trade, I can easily say, well, the GBP USD has been creating lower lows and lower highs on the higher time frame structure. We had the DXY doing the complete opposite. We had SMA confluences, and we had multiple things telling me that the market wanted to drop, right? And that's exactly what happened. If you look at the market when it comes to New York session specifically, we're not even talking about everything else, right? Just New York session specifically, we broke below a very strong level in the market, right? If you look out in the daily time frame, this was pretty much a huge important demand zone when it came to the market. Every time this market came into this zone, pretty much no consolidation at all. The market is completely rejected right off that point 3 times, right? 1, 2, 3, and then even a 4th time, right? So with that being said, when price broke below that zone on the monitor time frames, I knew that this was a very strong probability that price wanted to melt after the fact, right? This was just a break and retest. We had the 20 SMA rejection. We had price trading below the 50. We had all these different confluences. On top of that, if you look at the 4-hour time frame on the DXY, we were very, very bullish, right? Confluences were telling me that price wanted to go up. So all these different things are telling me that price wanted to drop. There's no reason for me to take buys. There's no confluences for me to take buys whatsoever. So that's the thing. You got to trade what you see, not how you feel. So, react. React to the market. If you see that the market is creating lower lows and lower highs, then take a sell. Find a good point where you see price not going past that point based off your strategy and take a sell. You could have taken a sell however you liked. Some people, they take sells when price breaks below like this and they do something like this. Okay, cool, you won the trade. Some people, they may take a trade like this but put their stop above the point like that. Cool, you won the trade. However, but at the end of the day, take the sell. So yeah, that's pretty much what I did, and I caught this 1 to 5 trade. This was the before, and I mark up every single trade I post. I have hundreds upon hundreds of trades that I marked up, and I do that to review all the trades that I marked up for the week, right? I take anywhere between 5 to 10 trades a week, right? 1 to 2 trades per day. So if I win all my trades for that day, I'm taking roughly 5 trades. If let's say I have a really bad week, maybe I'm taking upwards of 10 trades, or I don't necessarily even have to say have a bad week. I can just be taking upwards of 10 trades just based off that day or in the multiple days, right? And yeah, so this is what price is doing. I've seen all my confluences tell me price wanted to drop, and that's where price did. Price dropped. Yes, I had some drawdown. That's expected, but for the most part, gravity was pushing the market down, right? And that's kind of how you have to look at it. Where is gravity taking the market? Is the gravity taking it up? Is there something pushing the market up? Or is something pushing the market down? And if you want to, if you need to, look at fundamentals. Do more things if you need to. Look at fundamentals. See what the pound is doing. See why things are happening, right? I don't necessarily know why. I just react. If I see that the market is super bullish, I'm going to take sells when it comes to. If I see the dollar is super bullish, I'm going to be looking for sells when it comes to the pound, right? And vice versa. So, that's kind of how I do things. I just react. If I see something is bullish, I'm going to be taking sells when it comes to the opposite. You know what I'm saying? And that's what you want to be doing, man. You want to be looking for high probability setups that follow the higher time frames and be patient. PDC, patience, discipline, control will equal consistency. If you have the knowledge, if you have the skill set, which 9 out of 10 traders coming into this game is going to be able to find a great strategy, a great person to teach them, and have all the tools they need to pretty much be successful in this market. But what's going to separate them from the next person is patience, discipline, control, everything that comes down to psychology. Why? Because that's going to keep you in the market long term. 90% of their traders lose their account or blow their account in 90 trades or within 3 months. So with that given said, it comes down to who's going to last the longest and who's going to stick to their strategy the longest, right? The person who's doing that is going to be the person who wins. Yes, you may not have everyday win, right? Your strategy may only have a 40 to 60% win rate, but when you do win, you're catching 1 to 2s, 1 to 3s, and 1 to 4s. Trades like this is a 1 to 5 trade. So I can lose the next 5 trades and still only be at break even versus someone else who doesn't have a risk management plan, who they can catch a 1 to 5 and then they can lose their next trade and then they're down even more. You know what I'm saying? So risk management is key, guys. Using multiple confluences and everything is going to give you the best edge when it comes to this market. And as you can see here, just to break down again, the DXY is the strength and weakness of the dollar. So with that given said, if you know that the dollar is being very, very strong and bullish, right, and this is the DXY, you can search it up. Just like any other pair, you search it up, and it's the one I use is this one right here, is US dollar currency index and index CFD TVC. And I just added, I only stick to one pair, and I use DXY as well. And that's pretty much it. I use the second one for Oanda. I use that for when I mark up a second pair, like a second entry. I'll just, mark it up on the different ones so I don't have to clutter one chart. But again, I only trade one pair, you know what I'm saying? And I take 1 to 2 trades per day, and I stick to one session predominantly. I may take, a trade here and there during London session if I'm up and I see that it's a high probability setup. But for the most part, I know that I can be very successful and profitable sticking to one session. And that's pretty much what I do, right? The market was super bullish when it came to the dollar, right? Super, super bullish. The market is just telling you that price was going to continue to keep going up and up and up and up and up. And if the 15-minute time frame is hard for you to see that, jump on the 4-hour time frame. You can clearly see that the market is going up. Use SMAs if you need to, right? 50 SMA I have red, the 20 SMA I have blue. I have a video that I've done on the SMAs. Check out the video. It's about 10-20 minutes long. It can give you all the information you need. And there's multiple confluences telling you that price wants to go up. We broke structure in the minor time frames. This was the lower high. Price broke above that point, created a higher low, and since then price just been creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, right? Cleared above this zone, right? And I knew all this stuff. So going into this trade, when it comes to GBPUSD, I knew there was a high probability that price wanted to drop. We broke below a very strong demand point in the market. We had a quadruple trust that was broken, so when price rejected that point, that was a perfect time to get in the market to take sales. I had a very tight stop, given my risk reward, caught 80 pips, and I was risking only 16 pips. But on top of that, I had a fixed risk management plan, so I wasn't just risking 16 pips and I was risking $500. I would have been risking 500 whether it was 18 pips or 30 pips or 10 pips. It would have been $500. So I was risking 500 to catch 2,500. And that's the type of thing that you want to be looking for. You don't necessarily have to be looking for huge risk reward trades, but you want to be looking for trades that give you higher time, greater risk and reward. Really, predominantly for most traders, you're going to be looking for 1.5 times, 2 times, 3 times, 4 times your risk, right? But you have to know that you're sacrificing your win rate when it comes to going for bigger risk rewards. You're not going to be able to catch 1 to 5s over and over again. You may only have a 30% win rate or a 20% win rate, but you still may be profitable. But if you have a 1 to 2s, 1 to 3s, 1 to 4s predominantly, or even 1.5, 1.5s, you're gonna have more like a 60, 70, 50% win rate. Back in the day, win rate only goes so far. you know, you got to have everything as well. So hope you guys enjoyed this video, and if you need to rewatch this video, like, comment, subscribe, join the Discord, join me on my Discord, follow me on Instagram, follow my Sleazy FX page on Instagram. I post on there as well, profits, and I'm gonna make these posts public when it comes to my trade ideas. So once I start to get more people checking out the channel and stuff, I'm gonna start following and start making these public so you guys can see these trades in live. And if you guys want to, maybe I can start trading live on Twitch or something every day, or even YouTube trade live, and you guys can tune in and trade with me. So hopefully you guys enjoyed this video. If you did, like, comment, subscribe, and yeah, stay tuned for more content.